Hi, everyone. And welcome to Chicago for those who are not from here. And for those who are from here, hope you enjoy the 3 Chicagoans, I guess, that we have on this panel. Yay. And also, we were remarking about this earlier, that this is the one panel, I think, in this conference where the women outnumber the men. But since we're talking about general trends in digital assets, this will be a trend, right? With crypto going forward, I'm sure. But I will let Karen introduce herself. We'll just go down the line really quickly and then hopefully have a really fun discussion.
Thanks, Rumi. I'm Karen Wendel. I'm the Chief Commercial Officer for Kingdom Trust. We're a qualified custodian, and we've been in the business of custody for 10 years, but have also been in the crypto space for about 4.
Thanks, Karen. So my name is Ben Floyd, and I head up OTC trading at Coinbase. We deal with a whole range of clients, from endowments to crypto funds to traditional hedge funds when they're looking to buy large lots of crypto.
Name's Imran. I'm a general partner at Token Daily. Token Daily is a research platform that offers news and research articles. We're in the midst of launching a venture fund that will be coming soon to you.
Hi, I'm Colleen Sullivan, CEO and co-founder of CMT Digital. We trade globally on crypto spot and derivatives exchanges. We also have a venture investment arm where we have 21 portfolio companies in the space, and then we also do quite a bit of legal and policy engagement.
And I'm Rumi Morales. I am a partner and head of venture at Outlier Ventures, which is an investment platform focusing on very early stage open source protocols where blockchain kind of works together with AI and IoT, not to throw all the buzzwords at you, but it's really around data, right? How data is captured, and then how it becomes organized and exchanged, and then how you learn from that data. So we're really investing in kind of the frontiers of blockchain going forward in a more of a machine-to-machine economy. So there are a lot of trends to discuss here. I thought we would kind of split it up into 2 areas, one about changes in activities and trends in activities, as well as trends in assets. So with activities, this will cover things like trading and custody, security, venture, regulatory issues, and so on and so forth. But Karen, you made an interesting comment. Let's talk about custody. When you saw the sponsors for this conference, do you want to highlight that?
I think it's really interesting. Thank you, Rumi. I think it's really fascinating that when you look at the sponsors of this conference, is you have 4 custodians. And each of the custodians, I've heard a lot of people talk about how the custody problem is solved and you don't need to worry about custody anymore. And I think to a certain extent that's true. But I think what we're going to see is there are lots of different kinds of custodians. Mm-hmm. And so if you look at the 4 custodians and you go from the top, because I'm the one who's talking, right? You have Kingdom Trust, who is more of a traditional custodian, a qualified custodian, who came from the alternative asset space and moved into crypto. Then you have Coinbase, who is an exchange, who moved into crypto custody as a way to support their clients. Then you have Anchorage, who's a bespoke, built for crypto type of custodian. And then Knox, who's also entering into the same space. So I think what you're getting is a really interesting dynamic where you have different flavors of custodians who are offering different types of services, which I think is a really good thing.
Right, so with Kingdom Trust, they have how much of your services are focused on crypto?
Well, we've got roughly $13 billion in assets under custody, and a little bit less than 10% is in crypto.
Do you foresee that increasing over time?
So it has been the fastest growing portion of our business for the last couple of years. But what is actually now the fastest growing portion of our business is activities that relate to what we call the intermediate level, where people, and actually Colleen has some experience in this, where people are not wanting to move their crypto around, but they want to be able to trade it and have the ability to have net settlement without having to actually move it. And so that's actually the fastest growing part of our business today.
That's interesting. What do you say, Ben, on Coinbase and custody for you guys?
Yeah, I totally agree with what Karen was saying there. I think the industry is kind of moving towards a more kind of prime broking type model, where you don't need to move your assets for any single trade, whether it's on exchange or for derivatives transaction or OTC. I think especially given crypto is such an asset class with such high operational risks, the more you can leave it in one place where it's fully secure, the better. So I think that's definitely something that we're very excited to kind of look at, and it's something that our clients are asking for a lot. And to Karen's point, I think every single custodian offers something slightly different, which is great for the end user and end consumer ultimately.
Did you have Colleen, did you want to add something around custody from the CMT perspective?
Yeah, no, I mean, having started in the space early, we were sort of forced to self-custody because there really were no third-party custodians. And as a trading firm, it's still a little bit tricky for us because we need to move assets in and out of the environment so quickly. So the closer that we get to this sort of prime services model, I think the better. And that's definitely where we see the space going.
I think some issues with custody, for those who are still unfamiliar with the space, though, you're concerned about the custody solutions and how secure they are, right, the robustness. Imran, do you come across issues where people are skeptical still about custody? Or?
Yeah, so that's a great question. So a lot of family offices actually ask about our security protocol. They're like, so what are some of the security protocols that you use and why do you align with those? So interestingly enough, there's a few flavors that are out there that we talk about, and they actually go through the entire process with us, which is pretty interesting.
Thanks for that. So related on the trading aspect, Colleen, you've been at this for how long now? Can you tell us a little bit more about what you're seeing among the traders in the trading community in crypto and trends in that area?
So I think like two trends that we're sort of seeing. One, probably most people are familiar with, just kind of this shift from ICOs over to IEOs, so these initial exchange offerings, where instead of the token, the project issuing the tokens, it's the exchange facilitating that on behalf of the project. And the exchange is almost acting like a full financial platform where often they're finding these teams, they're incubating them, they're fundraising for them, they do the launch, and then they provide the secondary trading. From January, Binance did a BitTorrent's IEO through the end of May. There's been 63 projects, 518 million raised. What's interesting, though, and a lot of these panels have talked about the regulatory environment. These IEOs are all happening in Asia, although there are rumors that a big exchange may do that in the United States, but I think there's some regulatory clarity that we need in order for that to happen. The other interesting thing about them is that, some of them will do well with the initial launch and then the liquidity just dries up. And I think people forget that, market makers are going to make markets where there's a demand for the token. And if there's not a demand for the token, nobody makes money. So that is still an issue that the industry is grappling with.
Do you think then that there's going to be something beyond IEOs where you don't have liquidity in the hands of just Asian day traders, but something represents more institutional demand, perhaps, for some products?
Yeah, for sure. I mean, I think that everything takes time, right? And I think that's where the space is going. So I think the IEO is actually a really interesting innovation. And I think that as these markets mature, as the environments are more stable, because if you think about it from the standpoint of a market maker, you have to invest in technology and in personnel, and you have to have an inventory. So in order to sort of take that leap and want to support a project, you just generally need more maturity in the space. But that's where I think it's going.
So then for your fund that you're developing, how much of it is based on, say, these newer tokens that are being launched through IEOs or other mechanisms versus perhaps the more established top 10, top 20 types of coins out there?
Based on a lot of what the market's asking for, we're typically going to kind of focus on the equity side of the business because we think that there's still a lot of room for growth in that area, especially with where Bitcoin and Ethereum is at today. We think a lot of the value is going to accrue more on companies building on top. We do think in the long term, once there's some regulatory clarity, that products like IEOs, ICOs, and other kind of derivatives will start to kind of take up demand. So right now, as you can see, the Asian markets are the markets where they do well. And we think in the future, probably next 2 to 3 years or 5 years, depending on kind of where we are with some of the regulatory scrutiny, we think that will start to kind of uptake. So you'll start to see a lot of like these prime brokerages like Coinbase and others that start to kind of like not only in-house custody trading, but then also diligence these projects so that consumers are able to purchase the right kind of, or invest in the right project, which we think is kind of important in the space today.
Right. And then, Ben, around OTC trading in particular, are you seeing different trends or things beyond like what has been traded up until this point?
Yeah, for sure. So I guess the OTC space in crypto is probably about sort of 2 to 3 years old at the moment. And it's moved incredibly quickly. So we've kind of had the blueprint from traditional finance, so from FX and equities. And because we've had that blueprint, it's meant that everything has moved incredibly quickly. And right now we're at the point where it's led by a lot of kind of professional trading firms that have been doing fantastic work, kind of helping to build up the market. I think some of the interactions between the kind of retail and part-time traders versus the professional firms probably haven't been necessarily totally fair. So I think the market might kind of move towards more of an agency style. I kind of think of it like me playing, say, professional poker or playing poker with professionals. I kind of know how to play a little bit, but I'm no pro. So I think as the market matures, we'll probably get more agency desks that can bring a lot of liquidity to one place. So you're onboarding to one desk rather than 10 or more. I think it will also bring more pricing transparency so that you know exactly what you're paying on every single transaction. And if you've got some sort of fiduciary responsibility, then knowing that you're getting somewhat near to the best price and you know exactly what your fees are and it's very transparent, I think that suddenly looks a bit more like traditional markets as they start to mature.
Yeah, you used a phrase that's used often in conferences when we talk about this, which is as the market matures. I think that's something we've been saying for years, though, in ways. So I guess the question is, like, what represents that maturation? Like, when is that going to happen? Like, Karen, do you have a view on what's needed for the industry or in the markets to reach that point where you feel like, okay, the market is mature now?
Well, I think there are a couple of things that are needed for maturity. Obviously, one of the major things is custody. I mean, it's critical to have that kind of stability and that type of comfort. And I know that sounds like I'm being self-serving, but the reality is you do need to have custody. You need to have that separation and that objectivity. So I do think we're getting in that process. But I also think that the next level from the maturity perspective, and this may sound really obvious, is that there are some questions about the actors in the marketplace. And that it's not so much an issue probably on the institutional side, it's very much an issue on the retail side about who can be trusted in this space, who is it that is representing the best interest of the end client or the end customer. And I think one of the characteristics of maturity is when people feel that that transparency exists for them to understand, and is part of the point that was being made by my colleague here, about how you need to have transparency in pricing, you need to have transparency in execution, you need to have transparency in terms of regulatory compliance and reporting. And I think we're still a bit away from that today in terms of having all of those boxes checked. But I think we're moving much more rapidly toward those items today than we were 18 months ago. And I don't know if you guys agree with me, but that's pretty much what I'm seeing from our perspective.
Do you agree, Colleen?
Yeah, I think it sounds obvious, but I kind of think about it in two buckets. One, we just need the markets to grow, right? So right now, I think we're sitting at like 220 billion, which is 1/4 of the size of one US company, Apple, right? So it's really, really early. And someone on a prior panel made the point that it's tricky for large financial institutions to deploy the types of strategies they would like to deploy when these markets are so small. So one, and then, what does it take then to get those markets to grow, right? And I agree, transparency, custody, regulatory clarity, and then like the boring stuff, right? Like we need the auditors to know what kind of...
apologies to the auditors.
Sorry. I'm a lawyer, so I'm boring too. But, but like, how do you audit a custodian, right? How do you audit a custodian's policies and procedures and their processes so that you can then give the other boring but important, group, the insurance companies, confidence that they can underwrite, businesses in this space. So I kind of see it like as all those things, and it just takes time.
Okay. Kind of sticking on this idea of market maturity, though, because Imran and I were talking about, there's this, one of the first conferences I ever went to in Chicago on this was in 2014, when people like Vitalik and Brock Pierce, if anyone know either of those, were just hanging out at this conference. And in a way, we felt like we missed those days, right? Those like innovative, inspiring days, but you could say maybe the market wasn't mature then. Is there anything around the markets becoming too mature that you might lose innovation as an investor as you're looking at the new ideas? What are things that you're looking for for trends in the continued development of the technology in this space?
Yeah, I mean, if you kind of look at the markets the past few years, there's been a huge debate around scalability and kind of the bottlenecks in the crypto space. We think that's one area of kind of focus. You see, a plethora of different blockchains that are going to solve those issues. We also think there's some more nuanced areas that people are kind of overlooking. I think, speaking to you about this today, which is kind of like data analytics and data companies. We think that so for trends in the state, like if you look at the kind of the user behavior today, you're going to see three different things, right? We're going to see things that are cutting edge that may not work today, but they will 3 to 5 years from now. You're going to see things that will work today, but isn't as exciting. And then 3 is going to be projects that are 50-50. They may hit the product market or the fit, right? So the area that we're super interested in is areas where people can use a product today. So data is one of those things where people need it, they need to understand it, and they need to double down and understand what kind of trends that they can build out of it. Another area which is super interesting is like productization of financial products, right? So like futures, options, those are all investable opportunities. That's a product market fit right there, and that's a growing market as we speak. As you can tell, like a few days ago, back launch, although with much fanfare, we do think that in the long term, it's going to be a thriving product. And then if you look at number 3, there's going to be nuanced areas that we're super excited about that's going to hit retail customers, whether it's gaming, whether it's gift cards, which is actually a pretty interesting market itself. Those are some of the areas as a fund that we're looking at, we think is going to kind of scale out in the long term.
Okay, great.
Just touching on important data, do you think there's enough demand for kind of the data products out there at the moment? Do you think that there's kind of enough paying customers that are actually going to kind of pay the relevant SaaS fee for them?
That's a great question. So we think one of the thriving areas today is understanding the space. So some of the companies or some of the institutions that are going to look at data companies are governments, because they want to know who's paying their taxes, who's not paying their taxes. They want to know KYC, AML, right? Understanding whether it's going to fund a terrorist organization or not. So it's more about kind of protecting the industry. So we think one thriving area is going to be like forensic and areas that are able to kind of protect the consumer. But other data companies are emerging, and kind of like when the market kind of matures, we think like financial data is going to be incredibly important. And then I would say also like data around kind of user behavior, which will start to kind of perk up once some of these apps are being built on top and are getting some utilization. But right now, the first area is going to be like forensics.
Well, Colleen, CMT Digital has a fund as well, as you mentioned. What trends are you seeing as an investor in the space now for the past few years and looking forward? Is it similar to what Imran was saying?
Yeah, it is. And I think we bond over gaming. But yeah, the way things have sort of looked for us up until this point is, our portfolio is heavy on the exchange, trading, kind of lending space, because that's where we've seen, revenues. It's where we've seen M&A activity, and it's kind of core to that like infrastructure component of, the different gaps we feel need to be filled in order for the space to grow. But going forward, right now we're pretty focused on Lightning, so scalability. We are doing a couple of really interesting things there. And then gaming, it's, you just take something simple like Fortnite. I think last year it's reported they had $2.4 billion in profits. 69% of users purchase in-game assets, but they don't own any of those assets. Mm-hmm. They're all owned by Epic Games. So I think blockchain technology has the potential to be pretty transformative in that space where users can own their assets. So they can own their emotes, they can own their skins. And then ideally you would have, these gaming platforms, you'd have interoperability. So you could like take, your FH1 Hunter helicopter out of GTA, drop it into Fortnite, battle with that. And then you could ideally subscribe, to the people you like to watch game, like Ninja, and you can pay them in crypto. But we're a ways away from that just because of one, there's no incentive today for Epic Games to sort of break down that walled garden and do anything like that. And from a tech standpoint, that kind of a build out is not, for the faint of heart. Sure. But we think it's going to go there eventually.
We do. Like, there's another interesting trend that I'm going to touch on yours is that, Fortnite does $2.4 billion in revenue. A third of those customers are paying for something called Battle Pass. And Battle Pass is a $10 a month subscription that allows people to complete tasks or compete with each other. And then they get like in-app services, digital avatars, or cheat codes so that they can kind of skip a level or whatnot. But what's interesting is that this is actually a growing market. So there's other larger gaming publishers that are creating their own Battle Passes and charging subscription. Another interesting trend is there's a few projects out in San Francisco that I'm working pretty closely with that's building Battle Passes for the masses. What's interesting is that Fortnite is creating this kind of moat that kind of locks in users because of Battle Pass and then the V-Bucks that they offer, which is actually a threat to their ecosystem, which means that if somebody else comes out with a Battle Pass that's for other games, it could be a threat for their users. But interestingly enough, this Battle Pass that this company that's creating it could integrate with crypto, which could offer, interoperable kind of exchanges of goods and services, which is super interesting. So I think we're just starting that conversation.
You guys are really
pretty excited there.
That's how we do it.
I think like wasn't Fortnite? Didn't they have the biggest concert ever? Like 7.2 million
Marshmallow.
people.
Yes.
Yeah.
I was there.
Wait,
I went
amazing.
on
That's so cool.
Favorite show of the year.
I actually kind of went in some videos of Marshmallow because I'd never heard of him, and I was like, who is this person? It was literally just like a DJ with a marshmallow on his head, right?
Yeah,
it was kind of crazy.
And it's sort of on the trends thing. One of the things we think is this space really starts to take off when you don't realize there's blockchain technology underlying whatever you're using. And an example there is, I don't know how many in the audience know who PewDiePie is, but he was a guy on YouTube that had like the most subscribers on YouTube, really popular guy. And he was upset that YouTube was taking so much of his sponsor dollars. So he decided to move over to this new platform called DLive. And I'm sitting in the car with my kid in April, and he's all excited that PewDiePie has moved over, he's on the platform. Turns out that the Lino blockchain lies underneath DLive. So my kid didn't know that he had switched over to this blockchain-enabled platform where PewDiePie was able to take more of the revenue dollars from the subscribers. So trends.
That's great, yeah.
Thinking about like blockchain-based games right now, I guess like CryptoKitties is the one that kind of everybody went mad for. Can I get a show of hands? Like, can you raise your hand if you own a CryptoKitty?
That's great.
Okay, so what are we talking about? Maybe 20%?
Yeah.
So like still a bit of work for us to do there. But I bought one or multiple, and I kind of hope that they'll be on the wall in some sort of digital way in like a decade's time.
Yes.
Just as a bit of fun, really.
I agree. It's interesting to see these areas take off. I used to run the venture arm for the CME group, and we actually, as we were investing in this space, we found ourselves looking at opportunities alongside gaming companies a lot. There's actually a lot of synergy if you think about games and how much data they have to process, right? How many simulations they have to go through, and how much money they're making or have to exchange through their platforms. There's actually a lot of similarity with gaming issues and financial services. I've got a question though for, this may be less about assets, but more just about businesses in this space. Coinbase is kind of a young grandfather, I guess, in the crypto space at this time, and you've navigated the past few years, I think, very successfully. I'm curious, Ben, for your thoughts on what's next for Coinbase to continue to grow in this space as crypto changes, but then very similarly, Karen, as a more established institution now moving into crypto, what trends do you see as an established, older institution going forward in this space? So, Karen, I don't know if you want to start on your own business plans.
Okay. Yeah. So one thing I'd like to build on the gaming concept is, gaming is kind of an analog to, in certain ways, to what's happening in the charitable world, in the sense that people are finding new ways to pay for things that they hadn't thought about before. And so one of the things we're actually seeing at Kingdom is, because we have a lot of not-for-profit organizations, charitable organizations that want to be able to take contributions in crypto. And that's a really big shift that we hadn't seen before in figuring out how to deal with that, in the fact that they want to be able to make those contributions. But a lot of these big nonprofits, they bank with traditional banks, and and they're like, oh, how are we going to take this? And I think that is something that I think we're going to see more and more of as more people get involved in the crypto space. But in terms of trends for Kingdom, one of the things that is a really big trend for us, and I think it's going to accelerate, is tokenization, or STOs, or whatever you want to call it. Is the Kingdom, we've actually changed our tagline for Kingdom, and our tagline now is, we make assets fungible. Because our premise is that in the end, a custodian is really all about taking any kind of asset and making it safe and providing a mechanism for it to be able to be exchanged for some other form of asset. I mean, that's what we're really all about. And so what we're seeing is a great deal of interest from people who have real estate, who have mineral rights, who have other forms of alternative assets that are very illiquid right now, that are very difficult to manage, and they want to tokenize them so that they can take all of the advantages of the blockchain and then take advantage of this ability to unlock that potential. So that's one of the big trends we're seeing, because we are in addition to being a crypto custodian, we're a traditional alternative asset custodian. The other thing that we're seeing a great deal of is people who want to unlock their crypto and be able to lend it, or also be able to borrow. So people like Drawbridge, for example, who offer this ability for you to essentially take your crypto and lend it out and earn interest on it, and in a way that has very little risk associated with it, where you can perfect the lien on it. We see that as another big opportunity and a big trend, and I think it's particularly interesting for big funds who want to be able to unlock their crypto rather than just having it sit there. And it's actually more attractive than staking or any of the other types of opportunities that are out there, because it's using traditional financial structures to protect the asset. Right. So those are the two areas that, in addition to this charitable payment piece, we haven't gotten into gaming, but the traditional, those are the two areas that we see as being very interesting and very rapidly emerging.
That's great. And I would like to dig a little bit deeper on those two. Okay. But Ben, I was wondering first if you would just talk a little bit more about Coinbase's view of the world.
Yeah, sure thing. Firstly, on the chat.
The young grandfather.
Yeah, I quite like that. That's quite a good phrase, that. I think on the charitable payments things, we have a product called Coinbase Commerce, which might actually be able to help you with that.
So we can chat
offline. Yeah. So in terms of Coinbase, I guess we are very lucky that we have a business across retail, across institutional, across the custodian, and then like a lot of Web3 applications as well. The part that I focus on is institutional, and that's definitely an area that we're putting a lot of investment in this year. So that means we're hiring a lot more people, we're investing a lot in the technology side of things. From a trading perspective, that means that a lot of our flow is going to be going kind of electronic, so via API or via a GUI. We're still always going to have a high-touch desk where someone can speak to a person, but I think as with traditional markets, a majority of the volume tends to go that way. I think we're also looking at we'll start to look at other products. So Imran mentioned derivatives, simple structured products, whether you're a miner and you want to lock in a price of your BTC for a particular period of time, or if you're a large holder and you want to increase your yield. I think simple structured products is something that will make sense for the space to grow into. But yeah, for us, certainly in the seat that I sit in, for the next sort of 6 to 12 months, it's all about building our institutional business, building the brand, letting people know that we offer institutional custody, OTC, and various other things like that.
That's great. So the token point kind of caught me, because at Outlier Ventures, we might be one of the last ones standing, focusing on tokenized protocols. Many times for venture investors these days, many venture investors don't want to look at a company with a token in it, right? Maybe they've been burned in the past, or because of the IEO situation, the ICO situation we were talking about before. So I find that kind of curious. It's nice to see different cycles and different waves at different points along this chain. Do you have a view, Imran, did that surprise you at all on the tokenization comment? Are we as investors going the wrong way by focusing on startups and encouraging to tokenize versus working with more fixed, more traditional businesses or on real estate that are seeking liquidity in other ways that they can get?
Yeah, well, I'm going to have to disagree a little bit with you, because I do think tokenization will happen. I just don't think it's going to happen in the next 3 to 5 years. We do think that a lot has to do with education, and a lot has to do with user behavior. And a lot of people that operate in a traditional finance space today, they just like to call somebody up and pull a trade, or they have algo traders that are doing a lot of that kind of trading and support. So to change a user behavior is going to take some time. And so that's number one. Number two is tokenizing assets like properties and things like that is also interesting from a fractional perspective. But we also do think that not only like user behavior is going to be important to kind of change, but then also kind of the infrastructure that's kind of supporting that as well. So we do think that it will happen eventually, but just not right now, I'd say in the next 2 to 5 years.
We should talk, because we are seeing a lot of it, actually.
Cool.
And it's primarily coming from the traditional spaces where there is an actual physical asset associated with it. So it's gold, it's real estate, it's mineral rights, it's timber rights, no fire engines. But it's, it's physical assets that are very illiquid. Cool. And that have no broad market opportunity. And so one of our clients has one of his favorite lines is that the secondary market for moose taxidermy is actually much more aggressive and active than the market for real estate in Miami.
Moose taxidermy?
Which I think is a great analogy.
Moose taxidermy. Okay. Right. Hashtag moose taxidermy.
Hashtag moose taxidermy.
Interesting.
But they are actually having a great deal of activity, and they've been quite successful. And they are using proprietary blockchains, so it's their own proprietary blockchain. They're not running on any of the big chains, but they need a custodian. And so we're offering them custody services.
So they tokenize that?
They tokenized it, not the moose.
Okay.
And then you also brought up lending. I know, Colleen, you had some points on the prior call as we're thinking about this around DeFi and changes and with new products overall in the crypto space. Like, I know DeFi or decentralized finance is something that a lot of people like to talk about. What are your views on how that's going to be trending going forward?
Yeah, I mean, it's something that we're definitely keeping an eye on, and we're engaging more though on a kind of dog fooding basis we haven't sort of looked at DeFi as a real money making space as of now, but we think it's really important to understand it. So we're paying attention to it. I also think we may be a little ahead of ourselves from a regulatory standpoint there. I think that as the regulators catch up and start examining what's going on in that space, like a decentralized derivatives exchange, where the underlying assets are commodities, I'm sure the CFTC is not going to say just because it's decentralized, somehow we don't have jurisdiction over it. So I think there's a little bit of regulatory risk getting too far out in that space for us right now, but it's super interesting.
Yeah. Very similar to the phrase, when the market matures, it's when the regulators catch up, right? we hear a lot. So let's talk about trends in regulation. Yeah. Are we feeling positive about, pick a jurisdiction. Are we feeling positive about what's happening in the United States? Does anyone want to take that?
I'll jump on the grenade first and then pass it down. I think the problem right now in the United States is we just don't have enough clarity. I think the CFTC has done a nice job. I think the SEC is really lacking. We talk about tokenizing assets, and to the extent these assets are securities, then we need clarity from the SEC on how we custody digital assets. We need clarity on who needs to register as a broker-dealer, who needs to register as a clearing agent, who needs to register as a transfer agent, and what instances can blockchain technology serve in that capacity itself. And until you have that, you can't have a secondary market for trading these assets. So we're just kind of stuck, which is unfortunate because, as you said, in other jurisdictions, I think if you look at what's going on in Singapore and Switzerland, and those are not fringe jurisdictions, by the way, right? They're very healthy because the regulators look at this space as an opportunity, not as how do we shut it down, it's how do we make it work. And I think that's the fundamental difference.
What else is needed on the regulatory side, or even the legislative side? I mean, we've seen, obviously, the state of Wyoming, for example, do certain things. I mean, if the regulators may not be able to catch up enough, do we have any opinions? I'm just throwing this out there on what other types of policies can be put in place for people to feel encouraged to enter this space or continue to grow businesses in this space.
Well, I think the state of Wyoming is a really good example because they sort of said, hey, we're going to go out there and we're going to make this a crypto-friendly state, and we're going to build everything we possibly can to make this useful. And what they've done, I think, we've been actively participating in a lot of the sessions that they've engaged in, not because Kingdom is going to move to Wyoming, but because we think it's really interesting to see the types of questions they're addressing and the solutions they're coming up with. And I know that, to build on what Colleen said, I think that the federal regulators have had to go through this really painful learning curve. And they're still going through that learning curve. And until they've completed that learning curve, I don't think we're going to get the type of clarity that we need. And I think that that's going to take a while. And I think that there are going to be a lot of people, and people have said this on panels before us, so I'm not going to break any ground on this. I think that there's some uncertainty in the regulatory space because of the political dynamics. And so I think we're a little ways away from getting that clarity at the federal level in the United States. So what I think we're going to see is we're going to see states stepping up, and I think we're going to see movements to those states, and I also think we're going to see movements to offshore jurisdictions that have provided that clarity. I think that's what we're going to see. Okay. And we're seeing that as Kingdom.
Yeah, and just to add on to that, there are a number of projects that are actually moving from the States to different areas. I don't know if you've seen that trend.
We see it all the time.
Yeah, so a lot of those, like some of the startups that we're working with, whether it's in India or in the States, they're moving to Singapore, which is interesting. And they're doing this for a few reasons. One is so that they can understand the regulatory framework much better, and so that they can operate in a way where they can not have to worry about long-term regulatory scrutiny. I'd say number two also is once things like this happen, there's an aggregate of people that are moving into one area, which creates kind of innovation. Mm-hmm. So the more and more people that are moving out to Singapore and other areas like this, it kind of builds a demand for others to start to work with each other. So, which is something that I saw lately.
Right. In the few minutes that we have left, I like the gaming discussion as we're thinking about new use cases and assets that are developing. What other out there or different types of things are you coming across? Karen, I like the ones that you touched upon. Ben, are you seeing things like new use cases for tokenized assets, for crypto or for blockchain that you think, wow, right, I get it, that's interesting?
Tokenized assets, maybe not so much. I guess the DeFi space is super exciting. There's lots of great work being done there, and I think it's still at a very small scale, but a lot of the infrastructure that's been put in place could be incredibly exciting, possibly more for developing nations, more so than the West, where we all have great banking and we can all get access to pretty much whatever we need. But I think, yeah, the DeFi space has had a good year so far, and I'm super excited to kind of see how that continues to grow.
Mm-hmm. What's interesting about the DeFi space is that there's literally about two protocols that are really driving demand. One is MakerDAO and the other is Compound. So you'll start to see a lot of kind of interesting applications that may have been building their own protocols start to work with these types of protocols. So I think in the future, what we're going to see is a very similar effect in different ecosystems, where we'll have maybe one or two protocols within a sector that's going to kind of own the protocol level, and then all of the other apps and services are going to start to build on top of that. So DeFi was a great example of kind of showcasing what would happen to other sectors.
Yeah, and I heard Mark Andreessen say that the original sin of the internet was not building payments into the browser. Mm-hmm. And I thought that was a really interesting comment, because in 1994 you couldn't really do that, because in order to do that you had to figure out a way for people to be able to transact and value without trusting each other on this big trustless internet network. And that's really what Bitcoin did, and that's where we're headed, which I think is super exciting. We are now building out currencies into the internet, so you can transact in value, whether that's going to be microtransactions, micropayments, kind of going forward. So we're entering this whole new world, which is super exciting. Yeah.
So I'm just going to add to that. I also listened to that podcast. What was super interesting about what he said afterwards was that our internet economy is based on ads.
Yeah.
And that's one of the reasons why we're in the world that we are in today. But interestingly, in China and Southeast Asia, they're not in an ad-driven model. They're more in-app services, like gaming and purchasing digital avatars like WeChat and things like that. So crypto, I think, from a long-term perspective, is going to hit those areas first because they already have that user behavior in place. Whereas with us, we have to kind of push that from a regulatory perspective, from user education perspective, and things like that.
Yeah, please.
To me, the most interesting trend from all of this is, it ties back to everything that everyone has said, but to me the most interesting trend is that crypto and blockchain gives us the ability to unlock all of the value that's stored in ways that we've never been able to access. And to me, that's probably the most exciting trend, is that we're going to be in a position where anything that we have seen, have ever touched, that has value of some sort, we're going to be able to unlock that and to exchange it and trade it and do all sorts of interesting things on top of. That's the most interesting thing.
I totally agree. And if I'll make a plug for my own book and for Chicago, I think what makes Chicago unique amongst all cities in the United States is we are the only place where you have both financial exchanges like the CME and the CBOE and the trading community, plus traditional industries around logistics, transportation, manufacturing, supply chain, which will be elevating itself into mobility, smart cities, right? Industry 4.0. Combine that with the crypto infrastructure that we have here. It's very unique where you have this combination of traditional and industry with all machines to machines now being able to trade and extract value from each other. I think there's a lot of possibilities for the future. So with that, thank you to Karen, Wendel, Ben, I was going to call you Ben Folds, Ben Floyd.
Either works, it's fine.
Imran Khan and Colleen Sullivan, thank you all for listening to our panel today. Thank you.